dramatic turn of events, Bitcoin and the broader cryptocurrency market took a serious hit on Thursday, following a seismic shift in U.S. trade policy. President Donald Trump's sweeping tariff announcement sent shockwaves through global markets, rattling investors and triggering a significant sell-off across both traditional equities and digital assets. The financial world watched in disbelief as the S&P 500 posted its worst one-day loss since 2020, while cryptocurrencies felt the pressure, reinforcing their growing correlation with macroeconomic trends. The question on everyone's mind now is, where does Bitcoin go from here? Bitcoin, the bellwether of the cryptocurrency market, fell 5%, slipping to $81,914.63, according to Coinmetrics. Ethereum, the second largest digital asset, fared even worse, tumbling by 6%, while Solana's native token suffered an 11% decline. The damage wasn't limited to cryptocurrencies alone. Shares of crypto-centric firms also saw a sharp downturn, with Coinbase stock plunging 7% and MicroStrategy taking a 10% hit. The root cause? A sudden policy shift from the White House. Trump's decision to impose tariffs of at least 10% and potentially higher on certain countries intensified fears of a full-scale global trade war, spooking investors across all asset classes. Bitcoin has long been considered digital gold, a hedge against inflation and traditional financial turmoil. However, the market reaction to Trump's tariff bombshell suggests that Bitcoin is behaving more like a high-risk technology stock than a store of value. According to Ben Kurland, CEO of crypto research platform DYOR, Bitcoin's price movement is increasingly dictated by macroeconomic forces rather than cryptocurrency-specific fundamentals. Bitcoin moves at the intersection of narrative, liquidity, and leverage, Kurland explained. Right now, it's mostly trading like a high-beta macro asset, tracking real yields, rate expectations, and dollar strength. When real rates dip and the dollar softens, Bitcoin breathes. Today, we saw the opposite. Simply put, Bitcoin isn't moving independently. It's responding to shifts in global liquidity, interest rates, and investor sentiment just like any other risk asset. The idea that Bitcoin is immune to economic policy decisions or traditional market forces is quickly being challenged. Despite the steep declines, some analysts see a silver lining in Bitcoin's price action. Over the past month, Bitcoin has remained within the $80,000 to $90,000 range, showing remarkable resilience despite broader market turmoil. The key takeaway? While stocks nosedived, crypto assets held relatively steady. David Hernandez, a crypto investment specialist at 21 Shares, pointed out that Bitcoin's ability to hold above crucial technical support levels suggests strong underlying demand. Although the tariff rates were slightly higher than expectations, the announcement provided much-needed clarity on the scope and scale of the policy. Hernandez noted, "Markets thrive on certainty, and with speculation now largely removed, institutional investors may see an opportunity over the coming days to take advantage of compressed valuations." Hernandez's perspective highlights a crucial aspect of financial markets. Uncertainty is often worse than bad news. Now that the market knows the extent of the tariff changes, investors may begin to recalibrate their strategies, which could ultimately benefit cryptocurrencies. With Bitcoin caught in the crosswinds of global trade policies, rate hikes, and shifting liquidity conditions, the next few weeks will be critical. Here are some key factors to watch. Global economic signals. If economic conditions deteriorate further, or the Federal Reserve signals potential rate cuts, Bitcoin could see renewed investor interest as a hedge against economic instability. Institutional activity. With crypto prices under pressure, institutions may step in to capitalize on lower valuations. Watch for any signs of large-scale buying from hedge funds and corporate treasuries. Regulatory developments. Crypto regulation remains a wild card. Any major policy shifts, especially those related to exchange-traded funds, ETFs, or corporate adoption, could have an outsized impact on Bitcoin's trajectory. Technical levels. Bitcoin's ability to hold the $80,000 support level will be a key indicator of near-term market sentiment. A breakdown below this threshold could trigger further declines, while a move back toward $90,000 would signal a return of bullish momentum. The market is at a crossroads. On one hand, Bitcoin's sharp decline in response to Trump's tariffs underscores its evolving relationship with traditional financial markets. On the other, its resilience relative to stocks suggests that long-term investor confidence remains intact. The coming days and weeks will be crucial. Will Bitcoin break free from its correlation with equities and reassert itself as a safe haven asset? Or will it continue to mirror the broader market's turbulence? One thing is certain. In the ever-evolving world of crypto, nothing stays the same for long. For now, investors and traders alike must remain vigilant, watching macroeconomic indicators just as closely as blockchain developments. The crypto market is changing, and those who adapt will be the ones who thrive in this new era of financial uncertainty.